Turnaround Tuesday, everybody. Hi, Claudia. How are you? Who else is in the house here? Anders Olson, how are you? Ben? Charlie, how are you? Hira? Craig? David? Our FX family and face. Hello, everyone. Okay. Stalin is here. Hitler. Mao Zedong. Kim Jong-un. Jay Powell. Donald Trump, how are you? Thanks for being with us at FACE. Okay, so a couple of ideas for potential Turnaround Tuesdays. Keep in mind, this is not part of Pattern and Play, just some of my crazy ideas. Okay, so last week I had given up that we were going to get back up to this megaphone line and clean out the stops above 92 in EG. So it's happening now. Divergence is marginal, but still holding. Line comes in a little bit above 90. 04 looks like it, but you know, these lines, they're not exact. It's kind of an area. So if you look at the 15-minute here, pretty classic 1, 2, 3. Here's 1 confirmed right here, pullback. 2, non-confirmation, and so far pullback, and so far for 3, non-confirmation. So pretty short time frame. Looks like we're pushing up towards the highs. You could get a throw over. You know, anytime you have lines, you could just bust through them. We'll see what happens up here at 90 to 90.04. Also, yen, we had some divergence setting up here on shorter time frames. Look at this. Another 1, 2, 3, and coming off. Plus, Steve and others have mentioned the 90 area. 109 area as being important resistance, shows up better on the daily. Here we are. Here's this 109. I think there was a breakdown from here. So right back to it with some moving averages and divergences. I'm long-term bullish, but there could be a pullback from here. I don't think we're going to get new lows. I'd be aggressively buying the market if we correct this. We've had about a 200 pip run from 106.80 to 108.80. So why not back to 107.80, 107.5? But if you're long yen, which was very contrarian last week, you've had a nice run. I'd at least, if you don't want to take the reverse of it, be booking something up here around 109, see how it acts at this. Eventually, I do believe this 109 breakdown that everyone talked about will be negated, but maybe not today. Getting a pop in crude. Crude failed yesterday from this 58.40 level. I was looking at this, and short term, we had a confirmed high on the 15-minute. Maybe we get one more high. I was thinking 58 to 58.50. This was $2, so 61.8 would be what we almost hit yesterday at 35. Maybe there's another chance for it to do it. And then finally, the S&Ps are really at a critical area. This previous top support. This is going to be your first sign that there's something wrong. So I think that we hold here and we go. And I think what would help would be some relief of dollar pressure. I mean, if we just blow off to new highs above 98.30, I would assume the S&Ps could break down. But if there's going to be another run above the big round number of 3,000 and head up towards 30.40, 30.50, which many technicians are talking about, I don't think it happens with the dollar just blowing off to new highs here above 98. So still pretty crowded trade, this dollar trade. I think DSI is still in the 70s. I don't think it's been below 70 for 70 months or 70 years.
80.
Or
84. It's 84, Dale.
84. Well, okay, thanks. We'll see. I'm going to throw in the towel, at least short term, just money management from my shorts from last week, and above this high, 97.80. I would say there's a pretty good chance we're going to new highs, and you have to have a stop somewhere. Stell, you ever use a mental stop?
Sometimes.
Okay. I ever tell you the story when I use a mental stop?
No, go on. Oh, you went mental afterwards.
No, yeah, my first stop was the mental institution.
Yeah.
Anyway, blew out my account and had a nervous breakdown. Just kidding. I didn't go to a mental institution. I just went fetal for a few days, and then got up and started working to be able to fund another account. Anyone ever do that? Blow out account and then you have to, give an old joke a home. Yeah. Okay. Thank you. Where am I moving to, Stephen? All right. So those are a couple of things that I'm looking at: potential turns in yen, potential turn in the and turnaround Tuesday trades aren't always inflection points for change in trend. They could just be reaction trades, counter trend trades. I have to think that there could even be something setting up here in the gold. I know a lot of people, I talked about this yesterday, and gold's trying to make me look bad, that it may be a double top. But if I'm right about a yen pullback here, maybe that would be enough juice for gold to make a new high and take out this double top that the whole world's looking at. I think there's at least one buy stop above this high because people feel safe now. Shorts feel safe. We failed to take out this high. We've come off 30 bucks. So, they feel like they have it for a move to 1340, 1320, something like that. Let's see what happens here with the dollar. Is Paul speaking today, Stell, or is it tomorrow?
Yes, in just under 40 minutes, I think.
Oh, okay. Well, action aplenty on Turnaround Tuesday. So we'll be here live for the speech. I'm sure the team's going to cover it because we're the CNBC of the internet. And even better, I like all the anchors here at ForexAnalytix. Do a great job. We have an interview with Kevin Hunt. He's with Kim, who a lot of you guys know, Kim Crumpus, I believe, and I'm going to ask Kevin, what they teach over there. They're mainly, I think, scalpers, day traders. Maybe we could pick up a method or so. And just want to remind everyone that here it is for you. I've been in the industry, since they were trading currencies on chalkboards at the CME. And I've been with many companies, had my own over the years, and really this is the best team that I've ever seen assembled in one place. So join our community. And if you're overseas, call Justin and Trent to get reimbursed and get a rebate that could also pay for your subscription. They have a lot of brokers to choose from. Tell them what kind of trading you do if you're a scalper. Also, keep in mind, I know a lot of people that have more than one account for different reasons, usually at the same broker, but sometimes at different brokers, where they'll have a day trade account, a swing account, a position account. So maybe just try another broker. I know we all get comfortable, and I'm not big on change. I don't like to change things, old dog, new tricks, that saying. But, you never know if you have a good racehorse until you run it against another one. So just check out the other brokers. Maybe they have better spreads. Maybe you like the platform better. But important to, look around and not just accept, the status quo all the time. And with that being said, I'm going to bring Blake on. I want to hear where his head is at with what happened in the dollar and the pound. The gold's trying to come out of here a little bit. So gold could be a turnaround Tuesday candidate too, that we blow up here, especially if the yen pulls back. So yen and gold are pretty tightly correlated lately. And I wouldn't be pressing the short side of euro either. We still are putting in higher lows. And just wanted to point out that really the weak sister, look how close euro is to this low and this low. And look how far away Swiss is from these highs. So you've had euro retrace, I don't know, I bet it's, from here to here, I bet we're looking at least 61.8, 78.6, whereas the Swiss from its high has not even been able to retrace 50%. I think that's a little bit of a tell on the dollar. And that's all I have to say. Everyone kind of with me on a few of the things I said? Stephen, Charlie, Hera, Claudia. And let me bring in Blake.
Good morning.
How are you, buddy?
Good, good. Yeah, so we do have Pal speaking here in a little bit. And, the question is, let me grab my screen here. The question is, what does he confirm that we've had, some stronger data? It's hard to look at the data that we've gotten with the especially like the labor market data and the jobs report, and think that Powell's going to be dovish. Remember, Powell said there are things that they're seeing that below the surface, that stuff that I guess at the time when you had the FOMC meeting, you're like, okay, well, what are they seeing? Because it's obviously not the jobs market, because the jobs market, was strong, and the data continues to be strong. So it is. The question is, what are they seeing? And if he continues to be dovish, could that reverse the euro back higher? It could. Technically, we've broken below this channel, and anybody who is long the euro, up on this breakout is already, well out of the position. As you guys pointed out, the DSI for the euro is continues to be really strong. So that is a risk for dollar bulls at this point. I'm going to point out that the longer term chart, came out of a descending wedge, and that's, kind of a fact, and which means that we will find support at some point. And I might have to do a little bit of redrawing here if we have a situation where it looks like this, right? And then you take a look at this. We might end up being in a situation where we have more of a, a what?
Creative.
Yeah, just like, maybe a double bottom here, a little consolidation, and before we head higher. I'd be a little nervous being short the euro down here at this stage in the game. Like I said yesterday, I was really waiting for today to figure out what I want to do with Powell, or with the dollar at this moment. I'm just kind of waiting for Powell today to see what route he decides to take. A lot of people believe that if he continues to be dovish, that he is bending to the likes of President Trump and that administration. I have to tell you, I mean, that's a lot of pressure. If you got the president of the United States, regardless of how you feel about him, or it is the president of the United States, and if you got, if you're in his or her crosshair, no matter who it is, it's gonna affect you somewhat. And so if Powell is dovish, does he have data to back it up? Does he have reasons to back it up, or is he just really bending a knee to the president? So we'll see. Today will be interesting. If he sheds any light on the current economic situation, which he should. I think we all believe. Hold on, really quick. What data is coming out? Canadian housing starts, and it came in, actually. I'm showing it over here on Bloomberg. It came out better than expected. So, but it's not moving the dollar Canadian at all. Just so you know. I don't know why it got released a little early in one other place. So dollar Canadian isn't really doing much, but we got to watch the dollar Canadian if we come through this 131.50. By the way, I, as I mentioned yesterday, I'm really unsure with what I want to do with the dollar at this moment. But what I did want to do is I wanted to pick up some. I wanted to pick up some cross rates, and I bought the Euro Canadian yesterday. I'm going to show you why I bought it yesterday and why I'm adding a little bit today. Oh, I started buying it down here at 146.50 while we were in the chat room. And if you guys don't know our ForexAnalytix chat room, this is what it looks like. You guys are on Jumbotron. You guys can say hi this morning for those of you that are in there if you're watching. It's like 86 of us. Summer doldrums for us. It's a little slow. We're usually around 100 people roughly. It is a little, you can see. Everybody thinks they're a comedian. I put them on a screen and they think they're a comedian. Look at this. Look at this. This is what happens. Nice, Chi. That's really nice. You guys are all so funny. Anyway, I was in the chat room yesterday. I'm like, okay, I'm gonna buy a little Euro Canadian, and I'm gonna go ahead and move this. You guys are all a bunch of goofs. The reason why, whoops, I'm trying to make an adjustment over here. It's not really working on my other screen, but you guys can't even see what I'm doing over here. I'm just it's trying to fit it back over to my screen. I'll mess with it later. But anyway, I bought some Euro Canadian down here at 146.50 something. I added a little bit this morning at 147. Now we came out of this down channel. And if you don't know what's happening tomorrow, we have the Bank of Canada. Now, if you look at the Canadian pairs, the Aussie Canadian, for example, I mean, look at this move. I mean, just, massive. And let me go to a 4-hour chart. It's a little bit better. You can see there's just the strength of the Canadian dollar over the last couple of months, not just the, Aussie Canadian. There's the New Zealand Canadian. Here's the Euro Canadian. Here's the pound Canadian. I mean, these are massive moves. Here's the Canadian yen. And by the way, the Canadian yen was my chart of the day yesterday. And I was, noting the 161% extension, big trend line that we came up here. A lot of Canadian strength as of late. And what I'm hoping to see is a little bit of a reversal in this Canadian if the Bank of Canada is a little bit more dovish. Now we don't have any real reason to believe that they're going to be dovish. This is more of a, how should I say, a Hail Mary type of trade. My thought process was, if I can get a decent position long the Euro Canadian, and it just by chance the Bank of Canada comes out a little bit more dovish for whatever reason than the market is expected, that we get a reversal in this Canadian, what we've seen in this Canadian strength. And if not, at least I can get stopped out for break even. And that's my whole basis for this trade. It's not a I have a reason that I want to necessarily be bearish the Canadian dollar. It was more of a, hopefully there's going to be some position squaring between yesterday and today, and there has emerged, and that's what I'm trying to take advantage of. And I'm hoping that the Canadian or the Bank of Canada will be a little bit more dovish, and it allows for further liquidation of the Canadian dollar. Plus, if you look at crude oil, and I'm going to just take you over to crude really fast. Crude is right up against some pretty key resistance here. We've had a nice recovery, and if crude starts to roll over and we start to do this again, with equities looking a little weaker, and if crude starts to roll over, then we could get a situation where the Canadian currency might be hit by a little of energy prices weigh on it a little bit more, and that's what I'm hoping is going to happen. And so therefore, all I wanted to do yesterday was position myself in a very oversold position, on this case being on the long side, and hopefully we get the Bank of Canada tips its hand towards being a little bit more dovish, and that's all I'm hoping for in this particular trade, and then gives me a reason to maybe add to that counter trend trade. But the Euro Canadian has been just beat up, and so is all these other Canadian pairs. And I think about the euro and where the euro's at, and I'm like, the euro might find some support down here. You look at gold's still above 1380. It did dip to 1386 or 87 overnight. I had picked some up at 1390 on a bid. If you were in the chat room yesterday, in the ForexAnalytix chat room, I said I was going to pick up some gold on a dip to 90, and I did. And if gold continues to rally, that could keep the euro supported as well. So those are just a couple things that I'm doing this morning. One of the things that I think we should note is that the cable is extremely weak. We're coming down to 127% extension. We broke through 125, tripped a bunch of stops, and it looks like, and I'm really bad at UK politics because it's outright confusing. There's amendments flying around whether we're going to get if Parliament can actually approve a no Brexit. I forget what the amendment's even called. 30 minutes after everybody has been talking about it, I have no idea, because there's so many amendments and there's so many different things that are pushed into Parliament. But maybe Stelios or Steve could shed a little bit more light on UK politics. So, Steve, yes. Stelios, do you have any idea of what the heck is happening in the UK?
I'm trying hard to keep up, I must say. But from what I understand, Dominic Grieve, a Conservative MP, a very hardcore anti-Brexit person, he basically wants to put through an amendment that will effectively make it impossible for whoever succeeds Theresa May to suspend the Parliament to actually go through with Brexit and all that. So he wants basically to keep Parliament in session on certain days between September and December, and that will make it will be a big obstacle to actually go through the motions to carry out Brexit. Now the question is, this amendment has actually not been allowed to be discussed yet in Parliament. So we're talking about this, but it hasn't been allowed by the Speaker, John Bercow, and it might be though in the future. That's all the fuss with this. So that
so it's whether or not we're going to even debate
yes.
being able to approve a no deal Brexit or not. So
yes. It's just so difficult to keep up, and really all these moves, they seem a little bit desperate to me. So I don't know what to make of all this, but the point is that the pound, with all this uncertainty, will keep taking it on the chin, and is going to be under pressure for the near future at least.
Yeah. So and I think one of the things regarding the cable that we've got to keep in mind overall is the risk of a no deal Brexit is increasing, and that's it's worrisome for anybody that owns a cable, bottom line. And with Boris Johnson looking, ahead, I mean, the risk is really quite high, and that's scaring a lot of people that are along the cable right now. I don't know what's going to cause any relief in the pound moving forward, other than you might get some short-term bounces and short-term recoveries from certain technical levels, like we might find some support here at 124.26. But is that going to alter the current downtrend trajectory that we're on? And there's going to have to be something pretty significant in order for that to happen, I would assume, right?
Yeah, I think you very correctly said, Boris Johnson, he has said already that the UK will leave the EU on the 31st of October, no matter what, and he's the favorite to win, to be the next prime minister. That's what's scaring the market, because we're getting close to October again. You remember we were counting down the days to March, or we're getting close to October now, and there's nothing that's been done. My view is still that the factor which is going to bring the pound higher is going to be the avoidance of a hard Brexit. And I still believe that it will be avoided, simply because both sides want to avoid a messy no-deal Brexit. I mean, that's for sure. So how are they going to do that? I don't know. But I always say follow the money, and there's a lot of money at stake. And when both sides want something, I think last minute they will get it. So that's my view. But until then, man, it's going to be.
Well, yeah, last minute, the cable could be trading at 113 by the time last minute comes, right?
Oh,
I
yeah.
mean, that's the scary thing if you're trading the cable. So you just got to be aware of that. All right. Well, thanks, Stelios, for kind of clearing that a little bit. Appreciate it. So, I think we should all be watching the cable. And the euro pound is also another currency. That's in the limelight today because here we are at 90 pence. We could obviously continue to rally. I mean, if you look at the channel that we're following, just on a 4-hour chart, I mean, the upper end of the channel comes in at 90.50, 90.45. The 88% retracement of long-term retracement here comes in at 90.20, and I mean, we are at risk of making a move up to those levels. I would fear, especially if we start tripping the stops through 90 pence, that could keep some downside pressure on the cable moving forward. So looks like Kudlow's saying that there's Kudlow's saying there's no effort to remove remove Powell. So that's putting a little downside pressure on the euro right now, or upside pressure on the euro, excuse me, a little downside pressure on the dollar, because people are like, oh, well, maybe, if Powell sticks around, he's going to continue to be dovish. And you can see that the dollar has turned a little lower, not dramatically, but we're closing in on the lows of this the last couple hours. So just keep that in mind as we head into Powell, where he is speaking. And let's just double check this. Powell is speaking at, and this is in about 15-20 minutes, deliver opening remarks at an event hosted by the Federal Reserve Bank of Boston, because we said that yesterday, and there will be audience questions. So we're going to have to keep an eye on the dollar as we are. And look at the dollar. By the way, the dollar is into the big, what has been, and let me go into the 4-hour chart. This has been a big resistance support zone for quite some time. It's been a big area for I've had this drawn out for, I want to say, months now on the dollar index. And so we're, this whole 97.50 and 97.80, this is a big, congestion area, a lot of tops around there, a lot of previous support on the way back down. So this is just a very, what I like to call the high traffic zone that the dollar is in. So you just got to be a little careful with any dollar longs as we're approaching it. All right, I'm going to pass it over to you guys this morning. Dale, I know you're probably back. Steve is probably here.
Yep.
I am. We're all here.
And of course, Stelios is here. He was just talking. So good morning, Steve. Good morning. Welcome back, Dale.
Okay.
Good morning, Blake. Good morning.
How you guys doing?
Good morning, everyone.
So it's been a little bit of a recovery here. Oh, one thing that I know you're going to probably talk about this, Steve, and you got something very similar drawn on your charts. I'm looking at the gold market, and we're nearing our highs of the day after plunge to take out some stops this morning. I think we're in the midst of developing a nice little pennant formation, which overall is going to be bullish. I think, Steve, you had it drawn up as more of a wedge, but regardless, I think we're going to be bouncing around between this 1380 to 1425 to 1440 level for quite some time as we bounce around here. And as long as we hold above 1380, you guys know I'm extremely bullish.
What are your upside targets, Blake, if we break out of this formation? 1500?
I mean, well beyond that, actually, because if you look at just like the longer term charts here,
right?
Cryptocurrency lovers target 1 million for something that has no intrinsic value. Imagine where you target for gold.
Yeah, I mean, I think in all actuality, if we do break higher, I mean, we are looking at 1550 to 1550 to 1580. I don't think that's going to be. I don't think that's that's uncalled for after this big of a breakout. So, and if you, the inverted head and shoulder pattern really, I mean, this really longer term.
Yeah.
I mean, you look at what we can do,
Okay.
It can take us all the way up to 1700 realistically. So yeah, I mean, I would be once again very, very nervous about being on the short side of gold while we trade above this 1375, 1380 level. These are areas that, on these dips you want to try to take advantage of, and I try to do it when we get down here. So
it'd be pretty unusual for the Dixie to blow to new highs above 98 with this going on, don't you think?
Unless we're in we've got some serious risk aversion happening, which could happen with a false breakout on the S&P, but gold and the dollar tend to have a somewhat divergent relationship most of the time. So yeah, I mean, if gold is breaking out, the dollar should stay at bay. I would think, but we'll see. Gold's got to break first. It hasn't broken out. We're just at this point, we're just consolidating,
Okay.
So
Thank
all
you.
right, guys. Well, hey, have a great day, everyone, and enjoy the interview and enjoy the analysis from Steve, Stelios, and Dale. And make sure you visit our sponsors, which would be Forest Park FX. And you can find them right on our site. They're the ones that make this possible. So make sure you get a hold of them when you can. All right, I'm going to pass it over to you guys.
Thank you, Blake.
Thank you, Blake.
Thanks,
Good
guys.
evening, Blake.
Have a great day.
If you can't see the forest from the trees, spend some time in Forest Park.
Nice.
Huh?
Okay.
Great
Nice.
park. Let's have a picnic there.
Still, by the way, we had some Canadian data. I didn't want to interrupt a couple of minutes ago because it's building permits. I didn't expect that they're going to be like a huge market moving event. They were
it's a volatile series. The last print was 16%, and now it's -13. So net small positive, which is probably not a bad thing. So yeah.
Yes. Yeah, exactly. Regardless, it didn't do much. Bad number, but it didn't do much.
Yeah.
Okay,
a couple of things I would like to say. First, just to continue on the whole Brexit story, which I'm sure we all love to talk about. Labour leader Jeremy Corbyn did say that if there is a new EU referendum, that he will be campaigning for Remain. So he is now, well, he's always been a little bit more on the sidelines, but now he's the complete opposite of Boris Johnson and really trying to distance the Labour Party from the Tories, unsurprisingly. And so that was an interesting statement, although there is no plan for a new referendum, just to say this. He's just saying hypothetically. So that kind of wraps up the UK part. We had an interesting data print today. We had, it's not one of the major prints, but it was interesting. It was Italian retail sales, which was expected to be 3.8% year on year. It came in at -1.8%. So a huge miss for Italian retail sales. There's been more and more problems out of the Eurozone in terms of data. We had Deutsche yesterday. We talked about that, how they're laying off 18,000 people and restructuring the bank, basically. And we also had BASF, one of the biggest chemical companies in the world, German company.
By the way, so far, Deutsche's rebound is failing. I mean, we had a single day above this resistance, enough to get people that were short probably knocked out. And now we're trading back below this 770. Okay, it doesn't mean that it can't rebound from here. We saw at least some signs of life, but I definitely don't like the way that we had an island reversal here. Then we gapped lower. That's how we create the island. But look at this huge gap, and then we gapped lower once again.
Yeah.
So,
Ever hear the expression, no bank is an island?
Yeah. So yeah, that doesn't look good, does it?
Fantasy Island.
No, it doesn't look.
And the other thing I was starting to mention, BASF, one of the world's biggest chemical companies, issued a huge profit warning, and another German company. You know, they're not in trouble, but really the economy is not, it doesn't look like it's doing well. And with auto sales from Germany decreasing, Trump threatening tariffs on cars, well, you know, Germany isn't looking rosy, and Germany has always been the locomotive for the Eurozone. So the Eurozone is probably also in trouble. So can you tell I'm not bullish a euro at all?
Yeah, it's kind of obvious, but you know, it's really, the world has become, you know, very tough to figure out who's going to be weaker. You know, who's going to be who's going to have the weakest economy, or the, you know, less strong economy. I mean, we've had a period of already, like a very long period, that it's all about who is underperforming less and not really who is overperforming. You know what I mean?
Yeah, absolutely.
Okay, anything else, Celia, before we go to the charts?
No, that's it, my friend.
Okay, cool. Let me have a very fast look of what people want to see, although I have a lot of things to talk about today. And I want to start from having a look at what's happening with the bonds. So let's go to the 4-hour chart for that. First of all, treasuries. Here they are. Treasuries have broken below this ascending wedge. So, you know, this is a first sign that, you know, we should at least have some kind of a pullback, and it's threatening to break down below this horizontal support area. You can see it here on the daily, that we had already seen the signs of this RSI divergence on the daily. We've broken below this ascending wedge. We remain within an ascending channel, but even if we are to retrace, you know, back to the channel support, that's quite a significant move. So, you know, this is one thing. Coach, are you far away from the microphone?
Oh yeah, I went hooray. I have my pom-poms out for your red line to manifest to the blue line.
Yeah, so that might as well be the case. It looks like it. At the same time, the bunds have not made the move, but they are currently testing this ascending channels support. Keep in mind that, you know, this has been a one-way move, very, very strong, but, you know, nothing lasts forever. I mean, even the strongest bull or bear trend needs to, you know, catch a breath on occasion. So I wouldn't be surprised if the bund also produces from here, you know, a retracement lower. That's not going to change the fact that the bunds look very, very, very bullish. I'm just looking for pullbacks, nothing more than that to begin with. Okay. But, you know, both of them seem to be well positioned. The treasuries seem to be making the move first, which is not something surprisingly. If you have a look at what's happening with the Euro USD is under pressure because of this divergence. I mean, the treasuries are underperforming the bunds at the moment, so the yields, the US yields, are rebounding more strongly than the equivalent Eurozone ones. So that's one thing I wanted us to have a look at. The second one, and I had been warning about it, is the fact that copper seems to be breaking down below this channel, this flag. Okay, so this looks like a bearish development, and, you know, the next target is the one we were targeting since quite some time ago.
Hey, Steve, I figured out what Dr. Copper has a PhD in.
In what?
Gravity.
Gravity, yeah, it does actually. It does.
It's an Isaac Newton trade. All right,
yeah, don't fall asleep below an apple tree, right?
Yeah, or copper penny might hit you in the head. All right.
Yeah, I wouldn't be so much worried about a copper penny, more for an apple in this case.
All right, buddy.
So copper seems to be, you know, making the move here. But as I said, next support is not that far away, 257. I do think it's very, very likely that we're going to hit that. At the same time, there is a clear loss of momentum here in palladium. We've clearly seen that, and I think it is very likely that we're going to see the next move here as well, some type of a corrective move lower. Let's have a look at palladium in a shorter term scale, and you can see that, you know, this looks like a nice ascending wedge. We seem to be breaking lower. You know, even just a retracement of this ascending wedge would indicate that, you know, we have like a $90 downside from the highs. The start of the wedge is roughly at 1475. Okay, so that's another thing. Keep in mind, you know, this is a counter trend trade, right? I mean, there's no question about it. Palladium corrected lower because we definitely know that this was a corrective move lower. I mean, it wasn't, you know, it unfolded in a corrective fashion. And the next move higher that we've seen here has impulsive characteristics. So don't misinterpret what I'm saying. I'm also looking for a corrective move here, not a reversal and, you know, like a strong move lower. This is a low probability scenario, in my opinion. A correction lower is a decently high probability scenario at the moment, but nothing more than that. We also had a question about crude. So since I'm talking about tangible stuff, let's also have a look at what's happening with the crude. We've seen a rebound here. It doesn't seem that clear on the daily because it's shorter term price action, but we can definitely see it here on the 4-hour chart. And you see that so far this rebound higher is channeled. We even had a spike higher at previous support, 58.40, 58.50. I wouldn't be surprised if crude rolled over from here and produced at least one more leg lower towards, you know, this previous rectangle's resistance. Might act as support at 54.50 or a little bit lower. We have the 61.8 from the lows at 54.30. So I think that the risk-reward ratio, because I see a lot of you really are actively looking into trading crude, I have to say that the risk-reward ratio looks quite appealing for shorts here for an attempt to move lower, as I said, towards 54.50 to 54.30. So far, you know, it's not breaking down. So, you know, my preference would be to permit, you know, for a little bit more price action to unfold here. But I have to say that it's an appealing proposition, trying to be short here for one more leg lower. Okay, so I like it. Not that much that I've currently committed to that. I have other positions. Those of you that are ForexAnalytix members, you know that. By the way, today, earlier today, my pattern in play on the S&P fulfilled its target, and it has actually stalled here. That's why my target was at 29.60, because it is an area of support. You see that we've stalled here. So that made, by the way, nothing to write home about.
Did you book it?
I said that it was a short-term trade.
Booked it, right, buddy?
0.85%. If you're asking if I booked my trade, I mean on my actual account, no, not all of it. Not all of it. Not all of it. I still have half of a position, with the other half having no risk. So
it was a nice trade.
Yeah, it was. It was a nice fade there. It's one of those trades that I felt very comfortable about due to the labor market news that we had on Friday. If you remember, I said immediately that I think that this is going to taper somewhat the expectations for rate cuts. I don't expect that the Fed is not going to cut rate, but that, you know, it would.
Not a half.
Yeah, exactly. But it would it would completely eradicate the possibility that we would get a 50 base points cut, which definitely would somewhat reduce the bullishness of you know, longs for stocks, at least in the short term.
You know, the whole world's looking for about 30-30, 30-50. How about you, Steve?
Oh, it's very likely.
You know,
It is very, very likely that we're going to see higher prices from
some
here.
people 32.
Keep in mind that if you want to make a case fundamentally that stocks should move lower from here in the medium to long term, you know, it's a bad it's a bad proposition for one sense and one sense only. Current valuations have nothing to do with fundamentals anyhow. Okay, so the fundamentals will start, you know, playing a role when actually the market starts paying attention to them. There's no question about it. The current valuations are absolutely ridiculous. But you know, I see the case from a technical perspective. Why would we would continue higher towards 3,100, even higher from there? Keep in mind that I've shown this multiple times on this show. This is a pitchfork, an Andrews pitchfork that I have had for years on my chart, and it has worked very nicely. And as you see, you know, we have the ability to be more overbought in the short to medium term than we currently are. At some point in the not too distant future, in my opinion, we're going to be trading a lot lower than we currently are. But the market, from a technical perspective, doesn't seem to worry about, you know, any of the fundamental reasons that would create such an event. And you know, from a technical perspective, despite this pullback, which I think it was to be expected after the NFP data, I don't really see something that has broken, right? I can also make the case that on the short-term chart, we're also looking for a correction lower in the DAX. You can see here why, because the DAX has broken below this ascending channel. But also here, by having a look at the DAX, I can also not make a, you know, longer-term case why the DAX is going to collapse from here. I mean, I just see the potential for a corrective move lower as well. So keep in mind the retest of this 12,450 area roughly, I think it also produces an excellent risk reward opportunity for another leg lower, something like this. Okay, at the very least, something like this. So yeah, stocks might have a few more days of weakness, but I don't see them really breaking down from here, not yet, at least. Now, now that we've covered that, we talked about crude. I don't have much to say. I didn't go through the most popular metals because Blake really covered me with what he said. I'm also looking at this triangle here in gold and having to do with silver. Silver is still respecting this channel, and as long as it remains above like 1480, I still think that there is a chance that we're going to see more upside for silver. So nothing really to add to what Blake was looking at. We already covered the other metals. We covered crude, the bonds, you know, stocks. Now, having to do with cable, first of all, if you remember, I've kept saying again and again and again that I really don't know why any of you would be looking to buy the pound against anything. And, you know, the main reason for that is we've seen that a lot, you know, the vast majority of the rest of the currencies are stronger than cable. So, you know, you want to have a position against the dollar, you want to have a position against the yen or whatever. I really don't know why you would be choosing the pound. And I've kept repeating that basically on average every couple of days. I just want to add here that, you know, the only bullish scenario I see, which, you know, I wouldn't be putting any money on that. But if you're really looking to buy a pound, the only thing I see here that, you know, might act as support is the possibility of having a wedge, because this wedge's support already has, you know, passes through 3 candlestick wicks. And, you know, we tested earlier today this trend line again. So if for some reason you're extremely determined to be long the cable, you know, buying it here against this spike low, knowing that there is also this, you know, likely wedge here would make sense from a technical perspective. But as I've said, I'm not really a believer in pound. I would be staying away from it. I do realize why somebody wouldn't want to be selling it, because it's like battered down and very oversold. So I would understand why somebody would not want to be involved with being short. But on the other hand, I really don't understand why you want to try to catch a falling knife. I mean, the cable can't catch a bid for any reason, and doesn't seem to me like we might have some very positive news coming out any given moment. At some point, we're going to get some good news for the pound. In my opinion, any kind of a resolution on the Brexit eventually is going to be positive, because at least we're going to get all the uncertainty out of the way. But you know how it is. There is a deadline currently in October, and usually politicians, when there is no easy decision to be made, and that's the case definitely here, there's no easy decision to be made, they're gonna use up all the available time, so at least they can then claim that, you know, whatever unpleasant decision they made was because there was no alternative and there was no more time to, you know, to look, you know, for different options. So personally, I'm not very optimistic that before October we're going to get, you know, a resolution. Let's hope that I'm wrong, because I'm really, you know, bored of all the Brexit saga. But you know, that's what I see at the moment. Now, revisiting a little bit the commodity currency pairs, and starting by the Aussie and the Kiwi. Let me remind you that, and I've said that, I've written it also in my end of week analysis. It's, you know, we should definitely respect the fact that both of them got rejected from key resistance areas. I was looking for those areas since we started rebounding from here in May. And, you know, as long as the market respects them as well, you should be very careful with being long. Okay, I'm not saying that they cannot move higher. I'm saying that I find no reason to be bullish the Aussie or the Kiwi, as long as the Aussie is trading below 70.30, and as long as the Kiwi is trading below 67.10. Okay, as simple as that. Now, nobody says that we can't do something like this. We might as well do, but I'm not putting any money here as long as we, you know, we remain capped from like 67.10 and, as I said, 70.30. Okay, so that's my point of view here. And how does that affect my view? For example, in the Aussie yen, you can see it here, Aussie yen also staying below this 76.30 area. I have to say that so far, the price action below it is more indicative of a consolidation. So it looks to me like, I mean, I would more easily, from what I see here in the chart, bet on more upside in the Aussie yen at the moment than in the Aussie USD. I mean, just by judging of how this chart looks, the fact that we broke above a descending wedge here, etc. And here is Kiwi yen. Kiwi yen looks better than the other three, because as you see, this price action so far looks clearly corrective. It looks like a pennant to me. So I wouldn't be surprised if there's a continuation higher. So if I had, you know, if I had to close my eyes and buy one of those four, it would definitely be the Kiwi yen, based on, you know, how they look on the chart. USD yen, by the way, since we got the USD yen involved, keep in mind that it's getting very, very close to producing a bullish development, since we're breaking above resistance areas. We're, you know, we're trading barely just within the symmetrical triangle again. So that would make this breakdown from this multi-year symmetrical triangle as a false one. And, you know, that's not good news if you're bearish. I would remain a little bit more skeptical until I see these previous lows being taken out at, you know, 109.20. And in general, if I had to be honest, I don't like the way the USD yen is trading. So I haven't traded that in a long time, because.
But we're negating the breakout right now.
Oh,
We
yeah.
could go the other way, but we're negating the breakdown, right?
Oh, yeah, absolutely. That's a given fact. The fact that we never managed to accelerate, despite seemingly making a huge technical move, that is something to take into account. Definitely, that is definitely something to take into account.
Thank you, Brian.
And if you are to take that into account, it has to be a bullish sign, if anything, right? Now, I wanted to also mention the euro pound, simply because the euro pound, I have it drawn a little bit different than Blake. And I have to tell you that the euro pound, as we speak, is exactly at confluence of resistances. You can see here why on the daily. First of all, I view this last move higher in the euro pound as an ascending wedge. It can likely be an ascending wedge. I mean, that's going to be proven, based on what we do from here. But also, most importantly, we're also testing at exactly the same level this multi-year. It's almost in August, it's going to be 2 years that we've been trading within this descending channel. You can see it here. And we're currently testing that trend line resistance as well. So at the same time, we are definitely showing signs of RSI divergence on the daily. So, you like it to the downside, this is where you want to be short, as simple as that. You definitely don't want to see 91 cents, right? So if you want to be short here, like, I wouldn't want to see it break the previous high being at 90.92. Okay, so that's my point of view at the moment. So key area, do what you wish with it. Coach, by the way, was there anything else? Was that a Greek chap talking about political and financial sagas? That's a good point, Stephen. Yeah, absolutely. Absolutely. That doesn't mean that Greece doesn't have its own sagas. I mean, that, they're not mutually exclusive, right? Is Powell speaking? I think based on the schedule, Powell should have already started speaking, by the way. Stelio, can you confirm that? There is also a question if I can have a look at the pound card. I will gladly do so. Last time we had a look at it, I was looking at this expanding formation, saying that it was corrective, and I was looking for a breakdown from there. As you see, this has already happened. And my target, if I zoom out, you can see why. My target is down here, roughly at 160.70. This previous trend line, ascending trend line, you can see how important it has been. It has actually signaled many lows in the market. So, pound CAD looks good for a move at least towards that trend line support, and we see what happens from there. There's a question about the World, just a mention about World Cup. I don't know where that refers to. We had Women's World Cup, I think, right?
Yeah. US won, didn't they?
I think so, yes. I think so. Can't really watch women play football because it feels very slow. Once you've watched a lot of football, being played with men, it looks quite slow afterwards. No offense. I mean, it's a matter of.
Oh God! How offensive!
No, I didn't say like. Can you please check USD NOK? Yeah, absolutely. USD NOK is actually violating the resistance we had there. So keep in mind, we haven't closed on a daily basis above this ascending channel support acting as resistance. So far, we've been capped today by this 50 daily moving average. But if we close on the daily back, within this ascending channel, that's going to be quite a bullish sign, and it's going to be pointing higher. I can tell you that much. And USD CAD. Let me also mention we have continued rebounding from the 38.2. Even if we moved a little bit lower, as I said, 130 was like a key, very important confluence of supports. As I said yesterday, once again, you like USD CAD to the upside. That was the level you were to buy. I mean, you could buy, wherever we were when I was saying that yesterday, like at 130.70, put a stop loss, a little bit below 130. and, look for a rebound higher. It is still quite likely. Keep in mind that this ascending channel is still defining an uptrend. Okay. Notice also this little RSI divergence that we had here on the daily, another sign that we could have found a low there. Costa says just went long cable. Yeah, Costa, it might as well work, actually. From a technical perspective, looks like a good risk-reward ratio from here. As I said, I'm staying away from it, but honestly, best of luck with that. We also have a question about Kiwi CAD, and I know we have an interview, so I'm going to go over fast the Kiwi CAD and Euro Aussie, and then I'm going to pass it to you. So, bullish scenario in the Kiwi CAD is this wedge, right? Also keep in mind 86 cents is support, so something like this might take place, something like this. Okay, below 86, bad news if you like the upside. Also notice the RSI divergence on the daily, so we are also at the 61.8, so several technical signs that we have a decent chance of producing a rebound. At the very least, what I can guarantee, because that's the only thing I can guarantee, is that we have a very decent risk-reward ratio. And last but not least, Euro Aussie. Actually, it's better we have a look at the Euro Aussie on the 4-hour chart. Initially, I was looking at this rebound as a potential bear flag, because as you see, initially it was very well behaved within a flag, so it was looking quite bearish, but now we accelerated higher, so that makes me pause a little bit. At the same time, we broke above this descending trend line resistance on the RSI, so that makes me pause a little bit. I'm not saying that I'm not looking lower. I think there should be more downside, but perhaps from higher levels. Okay. The 38.2 comes at 161.90 roughly. I also have a horizontal support resistance area at 162.50. So we might as well rebound to either of those levels before we find more sellers and we see more downside. Okay. Thank you, coach. Enjoy the interview.
All right, thank you, Steve. I just want to clarify one thing when you talked about financial sagas and you brought up the Greek financial saga.
Mm-hmm.
I think, Greece is very traditional because all their financial sagas, mythology.
I wish it was mythology, because then it wouldn't be real.
Well, we're living in a mythological time.
Yeah.
So, anyway.
Greeks, unfortunately, having to do with political education, they're notoriously, we are nothing in comparison to what ancient Greece was, so we're notoriously uneducated on that. A lot of people here still believe in, fairies and unicorns, that you can have a government that more or less functions as, a socialist government, but at the same time, you can produce wealth, which, those two are incompatible, right?
So would you say Greece turned into more of ancient Athens than ancient Sparta?
Depends on which era about Athens you're talking about. This is a very big conversation. No.
Okay, all right. Well, Athens, we don't have time.
Yeah. We don't. Yeah. Yeah, we can have this conversation tomorrow. Yes, enjoy the
Yeah, okay, buddy. We'll do it when we meet over some ouzo.
Absolutely. We're still waiting for you.
Okay, I'm coming. All right. I'm going to drive over there.
Yeah. Don't forget to ask the genie to make you that bridge.
Okay, bro. Kevin Hunt, you're on deck. Thank you for your patience. Looking forward to talking to you and promoting you to panelists, Kevin. So let me just make sure that you're unmuted. You're unmuted. And there's a screen share, Kevin. If you want to show your screen, you just hover the mouse around the same area and you'll see share, a green box come up, and then you could share your screen with us. Welcome back to Face.
That should.
Here we go.
Should be working, yeah.
Got it. EU up there.
That's great.
All right. So welcome back. How are
Thank
you?
you. Great to be back. I'm fine, thanks. How are you?
Oh, good. So I believe you cover the Asian session for Kim and her company. The name of your company again, Kevin?
Name of my company is UK to Asia, although I don't really cover the Asian session. I'm covering the London session.
Oh, okay.
I work with the members twice a week, Wednesdays and Thursday mornings, doing a live trade plan, live webinar, going through the trade setups that I'm seeing, and I trade those two sessions with the members. And
Okay.
and from that, then I might trade New York throughout the rest of the week. Although last few months I've been pretty busy with a number of projects I'm involved in at the moment. So it's really only been the two sessions each week that I've been trading, just those two London sessions.
Okay. All right. So how would you describe your style?
Okay, our style of trading is very, very simplistic. It really is. Like I said to you before, listening to you guys speaking before in the lead up to this, it's mind-blowing to me. It really is. A lot of it is like a foreign language to me, what you were saying there, because all I'm doing is looking at these strip back charts, these bear charts. I'm looking at what price has done from when the Asian session started. The Asian sessions marks out with this grey box here. And all I'm interested in is what price has done prior to when I come to the chart. So you can see here at 1 o'clock was when I opened my charts, 1 o'clock London time in the afternoon. And
So you
I'm just
mainly day trade, Kevin?
day trade, yeah. Flat the market
Okay.
every day, no open trades of the
Okay.
weekend, so I can sleep overnight and enjoy my weekends without even thinking about the markets. So I'm just looking at this period between the Asian Open and where I open my charts. Now, obviously, if I was working the London session, I'd be looking at this area here, roughly about this small section here, what price has done. But because I'm trading New York this afternoon, this is the area that I'm looking at to get a read as to how I'm going to be trading these different
Okay.
pairs.
What would be compelling to you to get long euro?
Long euro, I would be the only way I'd get into the euro at the moment is if it broke this range. I'm seeing this as in a range. It's
Okay.
looking at this price action here. You can see it's not really gone anywhere. It's been pulling back, and there's nothing there. We have two types of trades we look out for. We have clear directional moves, or we have ranges. That to me is in a range, and I won't be touching that unless it breaks out of this high here. I'm not interested in it at all. But even then,
Okay.
I'd need to see across the board, like both the euro pairs that we trade, I'd need to see both of them moving up. I'd need to see some kind of, because the only indicator.
Okay, so this is a no trade for you right now.
No, not at the moment. No, I'm actually in a few trades. I've got 5 trades open at the moment where I opened the chart, saw the entry points immediately, and like I say, I'm in 5 trades. So I'll flick through these.
So specifically, you need the euro to take out that gray box high to become constructive on the euro, which comes in what, 12.20?
Approximately that, yeah. Or this low down here, I'll be interested in
That
taking.
would make you bearish?
Yeah, that's right, yeah.
All right, so those are your 2 trigger points for what's happening today. What's the time frame on this? 8-minute chart?
15-minute charts.
Okay, because there's an 8 under EU.
Oh, no, that's my stop. That's just a reminder. I mean, I pretty much know these now, but right from the early days, I marked my stop levels on there. So if I took a trade on the EU, I'd set my stop loss immediately to 8 pips. Very, very tight stops, very small stops we work with.
Okay. All right. So you started off here with the euro chart, so I thought there might be something you wanted to talk about on it.
All I'll do is flick through these charts. Same with the EJ, the Euro Japanese yen.
Okay.
That's ranging for me. I'm not interested in that unless it breaks a high or a low.
What isn't ranging? Pound is trending. What isn't ranging?
Pound US dollar. I've got this in a clear directional move to the downside, although I'm seeing a big pullback there. You can see I've actually got an open trade on this. Took it short at 58 as it came through an entry point. You can see down here, but seeing quite a large pullback there, getting close to my stop, which is 10 pips on the pound US dollar. So just need to see what that does. If this stops out, we've also got re-entry points that we can get back into these trades. If we're seeing that the pound is continuing this, what we're looking at is this overall move from this point here to here. It's been in a downside move. So that's to us is a clear directional move to the downside. And we initially are looking for entry points, pullbacks where we can get in on these clear directional moves. So like I say, I'm
Okay.
already got in that 58.
So, all right, bearish a pound, and you're short now with a stop above the market. What would it take for you to start trading the long side of cable?
It would need to break this range here, because if this price actually pulled back, hit my stop, and carried on moving up,
It would still be a sell up to where?
if it came back into this area here, this area
Okay,
here,
it goes back to neutral or
that's right,
positive?
yeah, back in a range, and I'd be looking for a range break to the upside.
Okay.
There.
So the gray box that you show is that still the Asian session, or?
Every chart is the Asian session. That's
Okay,
right.
and it doesn't include, does it include the whole Asian session from opening to close? Is that what the gray box represents?
It does, yeah. Yeah.
Okay, so there's what, about 30 candles a session on a 15-minute
Yeah.
chart?
Yeah.
Okay. Do you ever block out anything else, or is it always Asian session gives you the tell for London and the US? Is that really the methodology?
It's purely the Asian session if I'm trading London, because I'm coming into the market around about this area here on one of these candles here, but then coming into the New York session, working for the New York Open, then obviously we need to take all of this price action into account as well.
Okay.
You see?
No
And
use.
so,
Okay.
sorry, this white line here denotes where
Uh-huh.
I actually open my chart. So all of the price action prior to that is what I'm looking at to determine my trade plan.
Okay, so the box, so then your trading plan is based upon when you start up your platform.
That's right, yeah.
Pretty arbitrary.
Really is.
Okay. I mean, unless you're like me and get up before your alarm goes off, you know. But every once in a while, it takes me a little longer to make a pot of coffee. So maybe I'm not going to open my platform at the same time. So, how long have you been doing this now, Kevin? You know, you're a veteran, right?
I started trading. I've been trading probably 2013, something like that. 2012,
Okay.
2013.
6 years. Six
Yeah.
years of doing it. What
I
do you
actually
think?
joined. Sorry.
Go ahead.
I actually joined Kim in 2015, June 2015.
Okay.
And it's from that point on when I started to see profit and consistency and pull everything together. You know, you get that moment, or not a moment, it's over a period of time, but where things seem to make sense and you can suddenly see light at the end of the tunnel. And that was when it happened, really, when I started working with with Kim's criteria, and that's where I am now.
So Kim was a great mentor for you.
Genius, absolutely spot on. She really is good, absolutely spot on. Just Gerald, I mean, some people are
I'm
good.
going to be speaking to her. I have her scheduled finally for an interview, and I see her tweets, and so you know, now this really clears the picture up that she brought someone in that she, you know, mentored and showed things to, and has enough confidence for you to lead a group of subscribers. That's a great story, and kudos to Kim. And what a break to come to the right person, because Kevin, you know, you've been out there who some people end up with that you know, promise they'll teach them the secret to trading, and anyone that says they have a secret, you don't want to hear it, right?
That's absolutely right. Yeah, it's just I don't know what it was. Something gelled, and I mean, you might even find a mentor who's genuine, who's got a genuine system, and who's very successful. But you need to click with that person as well. You need to, I don't know, you need to accept and get on with the way that they're teaching and the kind of person that they are. And with Kim, I found that really easygoing person, straight to the point. She's a no nonsense person, and it worked really well. And if her strategy works for me, it really does.
You love her.
Well, yeah, I wouldn't go that far, but as a mentor, yeah. I've never met.
Well, there's all different kinds of love, Kevin.
We've spoken,
you know?
many times on the phone. We talk on Twitter. We email each other, but that's as far as it goes.
All right, buddy. I wasn't implying anything else, but I would love anyone that gave me tools to pull pips out of the market because they're giving a part of themselves to you. So why don't you share a few of the most important lessons you learned from her?
What's that thing? I mean, one of the most important things she said, you know what it's like when someone says something and it just clicks. It's like a light bulb moment. I remember her saying once, it was just a throwaway comment as she was chatting in one of the live webinars. But she said, this is not about being right. It's about doing the right thing, which is exactly what it is. And from that, it made me look at what I was doing and the way that I was trading. And I mean, you hear it so often, people saying that you'll only be a successful trader if you can trade without emotion. But you think about it, every second of your life you're experiencing emotion, even when you're asleep, you're dreaming and you're experiencing emotion. So from what she said, I then gleaned that the way that I approach it now is it's not about controlling your emotions or suppressing your emotions. It's about making sure those emotions don't affect the way that you trade. And if you can do that, whether you're feeling euphoric on a massive winning day or down in the dumps on a losing day, it makes no difference to the strategy and the risk management and the way that you trade. So that was probably one of the key points that she came out with without even realizing it. It's just
that's a pearl. So, I think a lot of people, I'll include myself, kind of beat themselves up if they're emotional in the market. And, we're not machines. So we can detach and trade, but, controlling your emotions and, like you say, repressing them isn't exactly a great solution either. Just maybe a different way of just feel it, but it doesn't affect what you see and what you're supposed to do. And really isn't where we want to get to be, Kevin, is that every trade, win, lose, draw, is just another, and we don't get elated with victories and we don't go fetal on losses, and we just consider it being just business, just another trade, next. And we learn to say next instead of dwelling.
Well said. That's absolutely right, Dale. That's the way to approach it. And don't get me wrong, I still feel down when I have a losing day, but it doesn't affect the way that I trade.
Yeah.
We're human.
But I mean, that's cathartic for me, and I'm sure for a lot of other traders, because we feel bad that we feel bad.
Of course.
Okay, so it's okay. So then you just get more disciplined and you won't feel as bad as often. And if you just look at it as being business instead of, do you think that sometimes we attach our self-worth and self-esteem to being right or wrong in the market? And that's why a lot of people end up with health issues, because they're internalizing what's a very difficult endeavor.
I'm sure that they do. It really is one of those things that can swing you from feeling great to feeling depressed, I would say, in many cases. In an instant, you could have one trade on. I mean, this US dollar, Canadian dollar at the moment showing profit. I can look at that and it makes me feel quite good. If that spun around and went below that 3120 level, if it dropped down below that entry point where I got in, it would niggle me a little bit. And then if it came down and hit my stop, I'd be a little bit fed up about that. And if that happens four times in one session, then that starts to get to you. But I don't try and shut that off. It happens, and that's the way things are, and I accept it. But each time I hit that button to take a trade, I've got to see the criteria. I must see that criteria before I take a trade.
And how about some athletes that, and they all care if they win or lose in a game, whatever sport it may be. But I've also heard the expression that they really just love the game, and they love playing the game, and they don't worry about the outcome. They just do their best on the court, on the field, and enjoy doing it, and don't worry about the outcome because they're doing something they love. So perhaps that's another way to look at it, is win, lose, or draw. You're in the game. You love the game. You just stick with it.
You can't focus on what the outcome is. No one knows what the outcome is going to be at the end of this session. I might be a winner, I might be a loser, I might be break even, but I don't know, and I can't let that affect the way that I trade. Not at all.
Okay. What did Kim teach you about risk? Obviously, she taught you a lot about risk management. If you could look for trades with 10 pip risk, all your trades set up to that kind of risk. And if that's the case, what are you looking for on the other side of RR when you're risking 8 to 10?
Ideally, we're looking at a minimum of 2 to 1 risk to reward. Ideally.
Okay.
You don't always see that. At the moment, I'm seeing weakness in the Canadian dollar. And this US dollar Canadian dollar trade that I've got on, I've set my stop loss up here just below that 50 level, because these levels, we've got 0, 0, 20, 50 and 80 as key levels. And that's what we're aiming for. So with this, I'm aiming for that 50 up there. That'll give me more than 2 to 1 if that comes in. But again, at the same time, I'm also comparing them and weighing up what the price action is doing with the CAD overall. So I'm looking at the CAD Japanese yen, looking at the US dollar CAD, as well as the US dollar and the Japanese yen outside of that, to see if I can push this trade, see if the trade's going to go up there. The other thing that I'll do is when it gets up to 10, maybe 15 pips profit, I'll lock in break even in case it spins back round. And that 10 or 15 pips used to be 20 pips. I used to wait until I had 20 pips profit before I'd lock in break even. But because we're seeing much smaller moves in the market over the last 3 years, maybe around about 3 years.
Tighter, smaller daily average trade.
Average ranges, that's right. They're much smaller than they were. So I'm locking in break even a bit earlier now, and it's just to cover my back.
How about partials?
Partials? No, I don't. It's in or out. I'm in a trade. I don't scale in, and when I take profit, I take profit. It's the whole lot shut.
Okay. Oh yeah. I mean, maybe something to consider. You're risking 8, you're up 8, you take half, and then you go to a B. Just just something. We're working every day.
Yeah, of course.
And it can be disappointing just to BE a lot. And if you could maybe put a little something lunch money in your pocket, just something to think about. I do it. But what would you say, Kevin, is what kept you going during drawdown periods, and what was your worst drawdown?
Determination, like a dog with a bone. If I decide I'm going to do something, I'll do it, and I know it can be done. It's not an impossible challenge. It's I've seen other people doing it. I've seen Kim doing it and being successful. And those early drawdowns, blowing up a couple of small accounts before I met Kim, I knew there was a way through it because I knew there were people doing it. It was just a case of finding that way through. And it was that kept me going. Even now with the drawdowns, I don't really take massive drawdowns. I might have a losing day occasionally, or rarely do I take a losing week. I mean, if anyone wants to look at my website, I post weekly results on there. You'll see.
Why don't you, this would be a good time to show your website.
Okay, well, rather than showing you the website, because I remember last time it started to freeze things up. So what I've done this screenshot here. So the website now, UK2Asia.com, and if anyone goes on there, they can click on About Me, and inside it will have all the results, weekly results. If they want to contact me on Twitter, and the other thing is, me and Kim, whenever we're trading, we always post live on Twitter, every single entry, exit, and what we're seeing in the markets as we're trading. So at UK2Asia on Twitter. And then I've also got a YouTube channel, which if you go to YouTube and just search for UK2Asia in the search bar,
nice.
About 110, 120 videos on there showing my live screen as I'm trading. I obviously cut out the pauses in between, and rather than it dragging on too long. But people can actually get a good idea as to the method that we use at the Price Action Traders Institute and the way that we trade through that YouTube channel. Okay,
well, when I interviewed Jack Schwager, I asked Jack, what's the most important advice you could give to a trader? And he said, find a trading style that suits your personality. So why don't I wrap it with, if you're interested in day trading, Nick has a specific question. I'm not going to, thank you, Nick. And Nick wanted to know what you think about crude at the moment. So anyway, Kevin, I keep this page up here because this is where you could find Kevin and follow him. Is your education separate from Kim's? Because I see Kim has courses. Do you teach the same course, or have you developed something individually on your own as far as FX education?
No, I work with Kim. So the 2 mornings that I'm doing the live webinar, I'm working with her members who are trading the London session. And anything, I mean, what I've got on my website is purely the basics of what we do. If anyone wants to go further than that, then they need to join the Price Action Traders Institute and get the full education from Kim. But they can still be working with me, shoot questions across to me, and we can interact like that.
Ben Maldonado had a great saying when we were talking about drawdowns: acceptance eliminates emotional pain.
There you go. Easier said than done, though.
Easier said than done, and you know what? That's what true love is, acceptance. Because isn't it? I mean, you have
really
to
is, yeah,
accept the right, Ben? I mean, I accept you, Ben, and some of the tweets I get from you. All right. Anyway, Kevin, it was a pleasure talking to you. You know, you're my trading warrior brother, and really respect what you do and what Kim does. Tell Kim hello for me. I'm looking forward to speaking with her. And hey, brother, I hope pips rain down on you with your methodology for the rest of the year, and especially this slow summer trading season.
Thanks very much, Dale. It's been my pleasure. Thank you.
Okay, everyone, that's Kevin Hunt, and you could follow him here at uk2asia.com, and same at the Twitter. So really appreciate Kevin spending time and edifying our community today. Good luck on Turnaround Tuesday. Looks like the dollar's starting to fade. EG is, I think, back at the megaphone top. I'm looking for shorts in crude. We're not there yet. Oh, yeah, EG's come off from that wedge line quite a bit. So that 3 drive working. So adios, everyone. Thank you again, Kevin. Really appreciate you being with us, and I'll see everyone tomorrow. Remember, don't just count your pips, count your blessings. And I count each and every one of you that hear our voices every day a blessing in my life. Adios.